T-bills are ultra short-term treasury bonds backed by the full faith and credit of the US government. Here we'll check out the best T Bill ETFs to buy treasury bills. T-bills, short for treasury bills, are just ultra short-term bonds from the US government. These short bonds with maturities of less than a year are called bills. Because they're backed by the full faith and credit of the US government, they possess no liquidity risk, credit risk, or default risk inherent of corporate bonds. As such, T-bills are quite literally the risk-free asset, as they're called. These special, seemingly boring bonds are considered a cash equivalent. At this point, you might be thinking this all automatically means negligible returns from treasury bills, but you'd be wrong. Their annualized historical return from 1928 to 2020 was 3.32%. The average rate of inflation over that period was 3.02%, which means a real return or return adjusted for inflation of 0.3%. T-bills are sold at a discount and don't pay a coupon like most bonds, so they simply return their face value at maturity. The difference between your purchase price and that face value is your interest. Because they're able to be rolled quickly, T-bills are also a decent inflation hedge. T-bills essentially kept pace with inflation during the double-digit inflation of the 1970s in the US. T-bills are a great place to park excess cash to be used for near-future liabilities so that you don't lose their purchasing power to inflation. This might sound crazy, but there have also been extended periods where T-bills outperformed the stock market. The 15 years from 1929 to 1943, the 17 years from 1966 to 1982, and the 13 years from 2000 to 2012. Any purveyor of market history will recognize these periods as being pretty abysmal for stocks. Stocks and treasury bonds tend to be inversely correlated, meaning when stocks zig, bonds tend to zag. Specifically, treasury bonds are a flight to safety asset that investors flock to during stock market turmoil or uncertainty. Now that you know why treasury bills are attractive for a variety of purposes and audiences, let's check out the best T-bill ETFs with which to buy them. They vary somewhat in size, maturity, and fees. First on the list is SHV, the iShares Short Treasury Bond ETF. SHV holds T-bills with maturities of 1 year or less. Its average weighted maturity is 4.7 months. The fund has over $14 billion in assets, likely simply because it is the oldest fund on this list. SHV has an expense ratio of 0.15% and seeks to track the Barclays Capital US Short Treasury Bond Index. Next we have BIL, or BIL, the Spider Bloomberg Barclays 1 to 3 month T-bill ETF. BIL goes shorter than SHV and holds treasury bills with maturities between 1 and 3 months. As such, BIL has comparatively less interest rate risk than SHV. This fund has over $12 billion in assets and an expense ratio of 0.14%. It seeks to track the Bloomberg Barclays 1 to 3 month US Treasury Bill Index. Next on the list we have GBIL, or GBIL, the Goldman Sachs Access Treasury 0 to 1 year ETF. Think of GBIL as basically a cheaper version of SHV, holding T-bills with a time of maturity less than 1 year. The fund seeks to track the FTSE US Treasury 0 to 1 year Composite Select Index and has an expense ratio of 0.12%. The fund has nearly $2 billion in assets. Next on our list we have CLTL, the Invesco Treasury Collateral ETF. Like SHV and GBIL, CLTL also holds T-bills with less than a year left to maturity. It's newer than the other funds already discussed, boasting only about $600 million in assets, but it's also cheaper with an expense ratio of 0.08%. The fund seeks to track the ICE US Treasury Short Bond Index. Last on our list is SGOV, the iShares 0 to 3 month Treasury Bond ETF. SGOV, or SGOV, from iShares is the newest fund on the list, having launched in May 2020. It is similar to BIL, holding T-bills with maturities less than 3 months. It's also the cheapest right now at 0.03%, because the managers have chosen to waive part of its fee until June 30th, 2022, at which point it may go up to 0.12%. If you are looking for a Treasury Bill ETF before that date, then go with SGOV. Otherwise, consider CLTL for slightly longer bills but a much lower expense ratio.